Have you ever wondered what the difference is between replacement cost value and actual cash value when it comes to your roof? Well, knowing these terms can have a big impact on your insurance claims and your overall financial security. So today, we're going to clear up the confusion and give you the lowdown on how RCV and ACV works. Let's jump in. Hey everyone, Tia at Trailstone here. And lately, insurance companies are pushing the actual cash value for roof settlements on their clients. But what does this really mean? You need to make sure you understand the differences and the effect it could have on your claim payment. So first, let's break down what RCV and ACV actually mean. Well, replacement cost value, or RCV, refers to the amount it would cost to replace your damaged roof with a brand new one of a similar kind and quality without factoring in depreciation. Let's move to actual cash value, or ACV. This is the RCV minus depreciation. So essentially, it's the value of your roof at the time it was damaged, taking into account its age and wear and tear. So for instance, let's say your roof is damaged by a hailstorm. If your policy covers RCV, the insurance company would pay for the full cost to replace your roof with a new one. However, if your policy covers ACV, the payout would be reduced based on the age and condition of your roof. Here's some examples to help you see the math. Let's say the new roof cost is $10,000. The RCV insurance payout on this is $10,000 minus your deductible of, let's just call it $2,500. So the final amount you would receive would be $7,500. Next example. The new roof costs, same price, $10,000. The depreciation, because the roof was 10 years old, is $4,000. And the insurance payout is $6,000 minus your deductible. Remember, we said it was $2,500. So your final payment to you is $3,500. Now, you might be wondering why this difference matters so much. Well, let me give you a real world example. Imagine a homeowner named Delilah. Well, Delilah's roof was damaged by a severe storm, and she had an RCV policy, which covered the full $15,000 cost to replace her roof. Her neighbor John had an ACV policy, and his insurance only covered $9,000, leaving him to pay $6,000 out of pocket. That's a significant difference. So when you're choosing an insurance policy, it's crucial to consider which type of coverage will best protect your investment. At Trailstone Insurance Group, we always recommend RCV policies for most homeowners because they provide more comprehensive coverage and peace of mind. But now in 2024, some companies are not even offering RCV on older roofs. So we'll help you navigate these issues when we shop your policies. Let's talk about how you can make sure you're getting the best coverage for your roof. I've put together 4 tips. First, review your policy. Check whether your current policy covers RCV or ACV. If you're not sure, give us a call. We're here to help. Second, understand what depreciation is. So you need to know how depreciation will affect your payout if you have an ACV policy. Third, consider your roof's age. Older roofs will have higher depreciation, making RCV coverage even more valuable. And fourth, get a professional inspection. I can't stress this enough. Regular inspections can help you maintain your roof and catch issues early, potentially extending its lifespan and reducing depreciation. So to sum it all up, understanding the difference between replacement cost value and actual cash value is crucial for protecting your home and financial well-being. At Trailstone Insurance Group, we're dedicated to providing you with the best insurance solutions and personalized service. Thanks for joining me today, and remember, your peace of mind is our priority. See you next time.